The reverberations of the yen crisis are felt far beyond Japan's borders. But how did we get here? Every crisis has a backstory. The yen crisis is no exception. Let's take a step back and look at the events that led us here. Japan's economy has had a roller coaster ride over the last couple of decades. It's been a balancing act, with the government trying to keep the economy afloat while battling the ghosts of deflation. Then, the Bank of Japan introduced a policy of bond buying, aiming to stimulate the economy. This move, however, had an unintended consequence. It weakened the yen against the dollar, making the U.S. Treasury bonds more attractive to investors. The yen started to tumble, losing almost a quarter of its value against the dollar. Then came the global pandemic. COVID-19 didn't just disrupt lives, it also threw economies off their tracks. Japan was no exception. The government had to impose lockdown measures, which hit the tourism industry hard. With the borders closed, the flow of foreign currency into the country reduced. This added more pressure on the already struggling yen. The global economic climate also played its part. The Russian invasion of Ukraine sent shockwaves through the world economy. Japan, with its dependence on energy imports, felt the impact. The cost of imports rose sharply, adding to the woes of the already depreciating yen. Meanwhile, across the Pacific, the U.S. economy was gaining strength. The Federal Reserve's interest rate hikes were making the dollar stronger. This created a ripple effect, causing currencies around the world to weaken against the dollar. The yen was caught in this wave. These events were not isolated. They were like pieces of a puzzle, each contributing to the bigger picture. A picture of a weakened yen that was losing ground against the dollar. A picture of a country trying to protect its economy while the world around it was changing. In the middle of all this, China was dealing with its own struggles. As the yen weakened, the pressure on China's economy increased. The country had to intervene in the currency market to protect its economy. This further complicated the situation, adding another layer of uncertainty to the mix. These factors have set the stage for the current crisis, but what happens next? Looking into the crystal ball, what does the future hold for the yen and the global economy? The Japanese yen, once a bastion of stability, is now on shaky ground. Its deepening crisis paints an uncertain picture for the future, not just for Japan, but for the global economy as a whole. There are a few possible scenarios that could unfold from here. The first scenario sees the Bank of Japan stepping in with a robust intervention to stem the tide of depreciation. This could involve measures such as interest rate hikes or tightening monetary policy. Such interventions have been effective in the past, but they come with their own set of risks and uncertainties. Another possible scenario involves intervention from global financial institutions like the International Monetary Fund or the World Bank. These institutions could provide financial assistance or policy advice to help stabilize the yen and prevent a larger global financial crisis. However, this would require international cooperation at a time when many economies are grappling with their own challenges. The third scenario, and perhaps the most concerning, is a continuation of the current trajectory. If the yen continues to weaken against the dollar, it could trigger a financial crisis in Asia reminiscent of the Asian financial crisis in the late 90s. Such a crisis would send shockwaves through global financial markets, affecting economies far beyond Asia. The ripple effects of the yen's depreciation could also impact other economies. Countries with strong trade ties to Japan could find their own currencies under pressure. Additionally, the U.S. bond market, which has been a beneficiary of the yen's weakness due to the attractiveness of U.S. Treasury bonds, could face significant volatility. In terms of the global economy, a weaker yen could lead to a reshuffling of global economic power. The U.S. dollar has been strong this year, but a crisis in Asia could shake its position. Similarly, the euro and the Chinese yuan, which have also been underperforming, could experience significant shifts. The future is uncertain, but one thing is clear: the yen crisis has far-reaching implications. As we wrap up, let's summarize the key points about the yen crisis. We've delved into the unfolding crisis of the Japanese yen, which has reached a 20-year low against the US dollar. Renowned economist Jim O'Neill warned that if the yen weakens to 150 against the dollar, It could trigger a financial crisis similar to the Asian financial crisis of 1997. This rapid depreciation puts immense pressure not just on Japan, but also on the region, particularly China, which may be compelled to intervene in the currency market to protect its own economy. Moving on, we've discussed the domino effect of this crisis. As the yen weakens, it could potentially destabilize the U.S. bond market and the U.S. economy at large. The strong U.S. dollar, fueled by the Federal Reserve's interest rate hikes, is outperforming other major currencies, including the yen. The imbalance created by this could shake the foundations of the U.S. economy, demonstrating the intertwined nature of global economies. Next, we've traced the road to this crisis. The Japanese economy has been impacted by a multitude of factors, including the Russian invasion of Ukraine, leading to rising import costs. The Bank of Japan's bond buying and the attractiveness of U.S. Treasury bonds have further contributed to the yen's fall. Looking ahead, we've explored the future outlook. Despite the looming crisis, Japan has the opportunity to address key issues in its economy, demographics, and military. The current crisis may prompt Tokyo to take necessary steps to mitigate the impact. However, the uncertainty remains and the world watches closely. In essence, the yen crisis underscores the importance of understanding global economic events and their interconnectedness. Economies do not operate in isolation. A ripple in one part of the world can cause waves in another. The yen crisis is a stark example of this reality. The yen crisis serves as a stark reminder of the interconnectedness of our global economy. It's a story still unfolding, and one we should all be watching closely.